Okay, well, Robert Sockin is with us. He's global economist at Citi. He's joining in with some perspective. Robert, good to have you with us here. Thank you very much for your time. The elections here, of course, front and center. What did you make of it? And if you've been able to speak with clients externally about what's happened here, what's the feedback and what's your own view? We'll also be, of course, speaking with the India economist, Samiran Chakrabarti, later in the day. But just a global sense on the elections here.
Yeah, absolutely. And very happy to be here. And as you noted, we had to digest the same news over the last 24 hours, which was very surprising relative to the figures we were seeing in some of the exit polling. That, as you've noted, the Modi government will be in power again, but failed to make that majority marker. And in fact, it seemed at the time that they were going to significantly surpass that in some of the early figures. Now, I think in terms of the fundamentals here, broadly speaking, India has been in a very strong place economically. It's been one of the best performers in the global economy. It had very rapid growth last year. It's continued to have rapid growth this year and, in fact, surprised us to the upside. We recently marked up growth for India. And there's a lot of long-term fundamental reasons to expect India's growth to be strong. So I think the underlying nuts and bolts of the economy are very solid. And what this election surprise does is it really throws some uncertainty into the mix about what the configuration of the government and what type of policies will be put forward in coming months for the years ahead. I think, broadly speaking, my sense is that the government does have some space in its budget for some additional spending, maybe on some more progressive policies targeted at increasing employment, maybe some policies targeted at rural areas. And I think the budget can withstand and support those initiatives. And then beyond that, I would expect many of the policies that the Modi government has pushed forward, such as policies to support manufacturing, technology, I think are probably likely to stay intact. So broadly speaking, I still look at the fundamentals as being in a very strong place. And I think you're still going to get a lot of continuity with maybe some differences than what people were expecting before, but still a broadly supportive picture for the economy.
Robert, hi, good morning. Great to have your views. So, it's very early. I know we'll ask Samiran about this, but any sense on to what extent you think will foreign clients and foreign investors be comfortable with a bit of a let-up on the fiscal roadmap? Indeed, if the government decides to sort of tilt more towards populist measures and taxation, for instance, how will it be viewed?
Yeah, it's a great question. And as I mentioned, I do think there is some space within the budget, and the government has some fiscal room to explore some of those policies and still be on a broadly healthy fiscal path. And I think investors are likely to see that and recognize that the budget has been moving in a healthy direction and the economy has very strong underlying fundamentals. They're going to continue to support investor inflows. So, again, there's a lot of uncertainty about how this is going to evolve. But broadly speaking, I think once the shock of the change plays through and we see what happens with the coalition government, with cabinet picks and with the budget, I think investors will still see it as a very attractive place to move capital. And so I do think over time, that story is very much going to remain in place and likely, given those underlying fundamentals, that for global investors, India equities and India debt can continue to be attractive additions to their portfolios.
But Robert, so you're not expecting a major move away from the current policies around manufacturing and capital expenditure. Is that what you're saying? At the margin, support the rural sector, but no major move away from the existing policy roadmap. Is that the right way to interpret it?
That's my interpretation. Again, of course, it's early days, a lot of uncertainty here, but I would expect that those policies of supporting manufacturing are likely to continue to remain in place. Maybe some of the larger structural reforms within that place might be more delayed or changed at the margins, but I do expect that those policies to broadly remain intact. And I do think India has a very strong opportunity here to benefit from the structural change we're seeing in the global economy, which is that companies and capital flows are looking to move away from China and towards other destinations. We see that in a very broad range of data, from what's happening with supply chains to global trade and capital flows. And I think India has been placing itself to be a large beneficiary of that rotation. And I think that's likely to continue to be a focus of the Indian government going forward, especially, again, with this opportunity to really benefit from that global rotation away from China that we're seeing that is very likely to continue in the years ahead.
Hi, Robert. Good morning. Nigel on this side, and good to see you in as always. Now, that was going to be my next point, right? You're looking fairly unruffled by a coalition government that India is going to have to come to terms with the next 5 years or so. And in the past, coalition governments haven't been so bad in terms of growth for India. Now, my point to you is valuations could be a bit of a headwind for India. And that's been the case. But they've always justified that, we have Modi 3.0 coming up. Now, suddenly you have a coalition government. Do you think those valuations become a bit of a headwind? Because we need to face this. We are trading at more than 20 times. A Chinese market that's expected, to bounce back, which it has done in the last few months or so. It's expected to grow at around 5%, and we discussed this the last time. So what's the toss-up between India and other emerging markets like China?
Yeah, absolutely. And as I mentioned, and of course, again, there is uncertainty with this new political shift that we're seeing. But broadly speaking, I continue to think that the fundamentals underlying the India economy are very strong and are likely to continue to be strong going forward. And that should make equities within India attractive to investors. And, we've talked about some of those fundamentals before. I mentioned India positioning itself to benefit from this manufacturing shift away from China towards other locations. But there's also, as we've talked about, very favorable demographic profile in India relative to China and relative to a lot of very favorable demographic profile relative to other economies, and particularly China. And so India has that favorable demographic background, and China, I think, is going to continue to face very long-term challenges that India is not facing, and again can benefit from some of that rotation. So I do think that India is well placed to continue to have strong growth, and we'll have to see how the coalition government evolves. But again, I'm looking for a lot of continuity within the policies, and I think that will continue to support the economy.
So India is still the preferred market among emerging markets. We got that right, Robert?
Yeah, I think exactly that India is one of the strong markets that investors should be looking at. And I think a lot of the question marks around China are less of question marks around India. And I think will continue to be a strong preferred market for global investors.
All right, Robert, always good seeing you. And thanks a lot for joining in. You're looking for continuity. You don't believe that the coalition government will be much of a problem from India's growth perspective. And reforms is something that you'll be keeping an eye on. Thanks a lot for joining in, Robert. Wishing you a good day ahead.